All right, let's talk about the housing market. But we're going to skip past the usual headlines everyone's talking about. Today, we're digging into a hidden risk, a quiet kind of manipulation that could be pumping up the value of your biggest asset, all without you even realizing it.
Look, for what feels like forever, any talk about housing has been about two things, right? Soaring inflation and these absolutely brutal interest rates. And yeah, of course, those are huge factors. They dominate the news for a very good reason.
But what if that's not the whole story? What if the biggest threat to the market and to the value of your home isn't just about the broad economy? What if it's about a very deliberate, very targeted strategy of manipulation?
And this isn't some far-off abstract theory. This isn't just a Wall Street thing. No, this is happening on Main Street. We're talking specific zip codes, specific neighborhoods. It could be happening on your street right now.
Okay, so let's pull back the curtain here. It's time to unmask these new players and figure out who is behind all this and what their game plan really is.
So the key players here, they're called institutional home buyers. And you gotta forget the classic idea of a family saving up for a down payment. We're talking about massive investment firms, hedge funds, private equity groups, buying up thousands of single-family homes at a time. And not to live in them, but to treat them like stocks in a portfolio.
And they have this simple but, man, brutally effective playbook. First, their computers pinpoint undervalued or up-and-coming zip codes. Second, they just flood that market with all cash offers, almost always way above asking price. And third, by doing that over and over again, they start to control a huge chunk of all the homes for sale in that one area.
And this really just lays bare how unfair the whole thing is. I mean, on one side, you've got a regular buyer juggling financing, inspections, all the emotional stress of finding a home. But for the Wall Street buyer, it's just numbers on a spreadsheet. They've got the cash to blow past everyone, waive all the rules, and basically push the average person right out of the competition.
So now let's see how this playbook builds into something much more dangerous. All of this intense, focused buying. It creates an artificial price boom, and that gives homeowners a pretty false sense of security.
You might see something just like this for your own neighborhood, right? A neighbor's house sells for 50 grand over asking, that another one does the same. And suddenly, your home's value on paper just skyrockets. Feels pretty good, doesn't it? You feel wealthier? But, and this is the big question we have to ask, is that new value based on real, organic demand from real families who want to live there? Or is it just propped up by a few giant investors? Is that foundation actually solid?
And that really gets to the heart of the risk here. We're not talking about a massive national bubble like back in 2008. This is different. This is like a series of tiny bubbles being inflated one neighborhood at a time. And the homeowners living inside them, they're the ones who are completely exposed, and they often have no idea.
So the big question is, how do you know if you're living in one of these bubbles? Well, we put together a kind of toolkit for you. Here are the red flags you need to be looking for.
Okay, red flag number one, a sudden and really weird spike in all cash sales. When you see a ton of homes selling without any mortgage involved, that's a huge clue that the buyers aren't your typical family next door.
Next up, you gotta look at who's actually buying. You can check public records for this. If you start seeing a bunch of homes sold to these generic-sounding LLCs, names like Tricon or Amherst, or sometimes it's literally just an address as the company name, that is a massive warning sign.
Red flag number 3 is something you can actually see with your own eyes. All of a sudden, do a dozen homes in your neighborhood get the exact same renovation? I'm talking the same gray vinyl floors, the same white kitchen cabinets, the same stainless steel appliances. That's a huge tell that one company is buying them all up to rent them out. And that leads us right into our final red flag. Those same homes that just got sold, suddenly they pop back up on Zillow or Apartments.com, but this time as rental listings, often with really high price tags. That's the endgame right there. Turning a neighborhood of homeowners into a neighborhood of tenants. All right, so if you're seeing some of these red flags popping up in your area, what does that actually mean for you, for your money? How do you protect what is probably your biggest asset?
Okay, so this all boils down to a few key things you need to think about. First, just understand that your home's value might be artificially high right now because of all this activity. Now, if you're thinking of selling, hey, you might be in luck. These firms are eager cash buyers. But if you're trying to buy, you need to know you are competing against some seriously deep pockets. And if you're thinking about refinancing or pulling out a home equity loan, just be cautious. You've got to look at the real long-term health of your local market, not just the pumped-up number you see on paper today.
For generations, a neighborhood was a community. It was about people. But this new model is totally different. When Main Street just becomes another line item on a Wall Street performance report, you have to ask yourself, who really owns the neighborhood anymore? And what does that mean for the future of home ownership?